Stocks of many of the major airlines well off what were highs of the morning. Of course, United had a strong earnings report. Let's get over to Phil LeBeau, though. Of course, the CEO joined him earlier. And Phil, the stock did come down a lot from where it was trading not that long ago.
Yeah, along with the rest of the airline stocks, I think it's the only one that's in the green right now. You mentioned how United posted better than expected earnings for the first quarter. That's really not what's driving the stock higher. What's driving it higher is the decisions they've made regarding curbing capacity starting in the third quarter. We'll talk about that in a little bit. Here's the guidance for 2025 in terms of what the company expects to earn. Now, they're sticking with $11.50 to $13.50, the guidance they gave in January. But this is important. If there's no change in the economy, if things are as they are right now throughout the rest of the year, they think they can at least hit $11.50 a share. But United says if the U.S. enters a recession, well, then it's more likely they earn between $7 and $9 a share, which brings up the question we put to Scott Kirby. Does he think we are entering a recession? Here's what he had to say.
I don't know, is the short answer. I mean, the economy, we have slowed down. But I think there's a lot more water to go under this bridge before we settle out into a new normal. And so we might, and we might not. That's why we also gave two different ranges, two different scenarios, two different outcomes for what happens in the macro economy.
But when you... All right, now look at where the revenue is in the key segments for United. Domestic, that's where the weakness is right now, down 3.9% in the first quarter. International, premium, basic economy, they're all up in the first quarter, and they continue to be robust as we go well into the second quarter now. But they are going to be cutting their capacity, and they're going to start doing this in the third quarter, bringing it down 4% from the original plan. Now, it's important to note they did not tell us what the original plan was, but they are curbing their domestic capacity. And this is the important point, guys. It's all domestic. They're not curbing capacity for any of their international routes. International remains strong. I wouldn't say it may not be as strong as last year, but they're not cutting capacity, and they're still very optimistic about what they're seeing. Quickly take a look at the other airline stocks. As we take a look at these guys, and all of them, again, came off of where they were earlier this morning. American, Alaska, Southwest, they all report next week. We'll hear what they have to say when we talk with their CEOs next week, guys.
Phil, how does a weaker dollar affect that international bucket for them?
Sure. Well, it has a huge impact. I've heard from a number of people who have said, and remember, most of the bookings for international for United are U.S. bookings. It's not somebody over in Germany, and probably not. It could be somebody saying, well, let me go to United and book a ticket there. It tends to be somebody in the United States saying, I want to go over to Europe, or I want to go to Japan. So in that regard, that's helping, because I hear from a number of people saying, look, with the way the dollar is right now, I'm going to go and make a trip somewhere. So that's the biggest implication that we're seeing right now.
Interesting. Yeah, definitely an area to watch. Certainly volatile this morning. Phil, thanks for staying on top of it. Phil LeBeau.